This is the Friday, May 1st, 2015 version of the Market Plus segment. Joining us now is Darin Newsom. Darin, welcome back.
Thank you, Mike.
I want to start with some of our questions from our Twitter viewers and Facebook followers. And Tim in Crookston, Minnesota has, I think it's a fascinating question. Would love to get your thoughts. What commodity could be the sleeper of the spring? And then he gives us three choices: corn, wheat, or pork.
You can make a solid argument for all three of them. If I'm looking at the markets, 3 months down the road, so let's say 4 months down the road as summer's coming to an end, it could be wheat. Wheat's very low right now. It's generating all kinds of bearish technical signals. But we're coming up on a time, harvest is going to occur. And if there's as much damage done in the wheat market as what those on the ground in the southern plains, particularly Kansas, are saying, this market could jump and run a little bit. It could get some assistance if the U.S. dollar index does indeed come down. Corn could rally if we see some sort of weather issue develop this summer, but that probably won't be until late July or August. And then the hogs have made a move. I'm not convinced it's going to hold yet. So the sleeper to me might be the wheat market. And
it's a great question. And 2 months ago, if we had a crystal ball and we saw this hog move, that clearly would have been the sleeper surprise of the year. I mean, we were counting on larger hogs, more hogs, and to see this thing trade sideways to lower, and now we're $20 higher where we were.
We got this quick jump, and what we have to see now is if it's able to push through some of this technical resistance. If it's, in other words, if it can continue to generate enough investment buying interest to push higher, if the commercial side of the market gets more interested and we start seeing cash prices go up, then that could keep this rally going. If either of those start to falter, then it wouldn't be overly surprising to see hogs start to drift back down.
Now, that kind of leads into a question we had from a couple followers on Twitter, which is looking at this bird flu, being as poultry is a relatively vertically integrated industry, and there's no futures market for chickens or eggs. Is there a way to trade the impacts of this bird flu? And of course, you mentioned on the show, hogs might be one of them.
Hogs might be one way. But again, we've made the move. Well, the person could look at substituting hogs for the chickens. You could also look maybe at selling soybean meal. If we start to really see this ripple effect go on, lower demand for soybean meal, possibly even corn. If you want to trade a bigger market than even soybean meal, you could look at, doing the same thing, selling corn on the idea that feed's going to continue to come down. Any of those are possible. They're all really going out on a limb, so to speak. Not completely, they're not 100% correlated with the chicken market, but they might provide an opportunity.
Right. And probably smell better than buying a lot of eggs and keeping them in the freezer.
Much easier too.
Now I would like to talk the cotton market with you. We saw a huge move last week and still a positive move this week, 27 cents to the upside. Seeing some strength continue into next week?
I think so. Now, a couple things going on. We've got strong commercial buying coming into the market, both old crop and new crop. So, old crop saying we've got some demand. Even though this week's weekly export sales and shipment report were a little less than what we saw the previous week, still bullish enough to keep traders interested. And then on the new crop side, I think there's growing concerns over, the weather that we've seen in the Delta, the continued rain, if it starts to turn dry again in Texas. So that's helping prop up the December contract. Now, on the flip side of that, both of those contracts are testing, again, some technical price resistance. So if we run both these contracts up, bang their heads against this resistance and can't get through, money could start to come. Maybe the fundamentals start to change. Maybe the spreads start to move the other way. So we'll have to watch all of this very closely. But at this point, it looks like cotton may want to try to continue to push higher.
Off the top of your head, do you remember what those resistance levels were?
I don't. You know me, I'm terrible with recalling prices. I look at 1,000 charts a day, and I don't recall those prices. But they'll be on DTN, I guarantee that.
Okay. Now, I do want to come to Phil in Ontario, Canada's question. Phil is curious, and you touched on this already, and with benign weather, avian flu, and the announcements this last week from South America, is the market chasing bearish headlines?
Yes.
Are we to a point where chasing the headlines is fueling this sell-off and the vicious circle?
I think so. It's just kind of the nature of the game anymore. you know, you can toss a lot of the old type of analysis out and just look at the headlines that are coming in. And right now, across the board in the grains, those headlines are generally bearish. If all of that plays out, if we get the crop planted perfectly, and if you know, weather is like what so many forecasters are saying, and it's going to be great this spring and summer, and all of a sudden we're looking at a record crop and demand's coming down. You know, we still haven't worked out all of the kinks of getting our corn moving to China. We have bird flu problems. You know, all of this is going to weigh on the corn market, and if it weighs on the corn, it's going to weigh on soybeans and wheat as well. So we're at a time right now where, you know, weather is going to be critical, but yeah, I think the markets are kind of at this key point in time where something's going to happen, or we are looking at things continuing to move quicker to the downside.
Now, looking from a weather perspective, the 5-day forecast for certainly the central upper part of the Corn Belt, Iowa, Illinois, Missouri, parts of Minnesota, next 5 days looks very, very wet. How would a wet spring beginning now have much room to move us to the upside?
It could, you know, because we're already anticipating, we were already being told we're going to have fewer corn acres this year. Not as small as what had been thought of, you know, last fall, but still corn acres are supposed to be down. Farmers aren't putting as much fertilizer on this year, so that could cut into yield. So now if we push planting date back a little bit and we threaten the crop with the possibility of, you know, doing some of it key maturing through the heat of the summer, that could cut into yield a little bit, or maybe we just lose more acres. Either way, if we go into an extended period of wet, I think the market is going to look at that. That could be one thing that stabilizes the December contract, maybe gives it a little life until everything works out again.
Okay. All right. Now, you mentioned on the program the dollar index and its recent moves. Where do you see that headed in this next week?
Like my, you know, being one of the few grain bulls that's been around for a while, who's, you know, getting ready to throw in the towel, I've been one of the few dollar bears for much of 2015. And if I look at both the weekly and monthly charts, they're saying, hey, this thing's getting ready to go down. You know, this week's announcement by the FOMC that maybe we're not going to see that rate increase in June. Maybe it's going to now be September. You know, the GDP was, you know, all of these financial numbers that came out aren't supporting the idea of let's start ramping up interest rates again. So there's a fundamental reason this dollar could start to back off a little bit. What did we see on Friday? Came screaming back, erased much of the week's losses. I still think that what we saw in April, what we saw for the balance of, for most of last week, could pull the market down, could pull the index down. And if that does, maybe that's enough to bring some buying back into commodities. We've seen it come back into energies for no fundamental reason whatsoever. Energies are going up. Maybe it will be enough to leak over into the grain short term.
Okay. Well, Darin Newsom, I want to thank you so much for taking the time to join us this week.
Always enjoy it. Thanks, Mike.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please tell your friends, and please continue to do so, and we will get expert analysis straight to you. Thanks for watching, and have a great week.